most prop firm traders, they fail their challenges because of hidden rules. And I'm gonna break down every single rule that there is in CFD prop firm space, that there is no way you're gonna lose out on your payout, or you're gonna lose out on your challenge phase. There is something to learn from all the way from a beginner and all the way, even if you are a professional trader, there is something to learn out of this video. So I would like to get started, and you guys please get your pen and papers and get ready for this amazing video, right? So these are the things that I will be covering in today's video. So if this is something you guys are interested in, do stay on the video, or else you guys can just click off and just keep losing your trades, you know. All right, so let's start off, right? What are CFD prop firms, right? CFD prop firms are just nothing other than a firm that gives you an account, right? So how I imagine these guys are, so you go to school, you write an exam, you pass, and you get your grades, correct? So these are companies where you write exams, and instead of getting grades back, you are getting what you signed up for example, right? So you are paying for an exam, which is your challenge. You pass the exam adhering to the rules and the restrictions that a prop firm has given you, you get funded, which is your certification, right? So this is what prop firms are. But most of the accounts that they give you, almost all their accounts are simulated funds. You guys have to put your head through that. Those are not real money that you're trading with. Those are simulated trading environment. All right. So now let's move into the most typical evaluation structures. So I'm keeping this video to the most industry standards. If you guys do have any doubts, very specific doubts on prop firm or on your payout, on your challenge, on your live funded phase, do comment and I will get back to you as quick as possible. And if you want to reach out to me personally, you can just join my free training community. The link will be in the description. But yeah, let's get on with the video. So the most typical evaluation structure, so you have your two-step, right? So it's just the amount of examinations that you have to give in order for you to get your certification, correct? So in most cases, you have 1-step, 2-step, and 3-step. But most of the people usually go for 2-step. So in the 2-step, you usually have a phase 1 target of between 8 to 10% and a phase 2 target of 4 to 5%, depending on the different firms that are there out there, right? Now, the risk limits apply for both the days. The minimum trading days are always required. And there is an alternative 1-step model, just like I said, right? It's just lower targets. You will have to achieve the 8 to 10%. And that is it, right? And similarly, if it's a 3-step, you will be doing the same, but pretty much split out, maybe like a 6-6-6 or an 8-8-8, something like that. All right. So now let's get down into the third topic of the day. What are profit targets, right? So profit targets is basically the target in terms of percentage, right? For example, you have a profit target of 10% in your step 1, right? So whatever account you get, for example, you get a 100,000 account, so you will need to reach a 100,000. You will need to reach a 10K profit in order to pass the examination, to pass your challenge. So that is what you mean by a profit target. And different phases have different profit targets. So that is something that you should keep in your mind. All right. Let's come down into the fourth topic, right? Which is your risk limits. What is a maximum daily loss and what is an overall max loss. All right, it's very simple. So usually this is where a lot of people falter, right? So you have your profit target and next comes your loss. So when you talk about loss, you have daily loss and then maximum loss. Okay, in your daily loss, you are looking at about half the account or half of what your maximum loss is, right? So if in most cases your maximum loss comes anywhere between 8 to 10%, so your daily loss will be anywhere between 4 to 5%. All right, so what this means is, if suppose today I take a trade on gold and so I can maximum lose today 5%. If I lose 5.5, 5.1%, I'm losing the account. The account gets breached. Similarly, when you talk about a maximum loss, supposedly, unfortunately, right, it happens to the best of us out here, if we lose trades back to back to back to back to back, right? For example, I risk 2% today, I risk 2% tomorrow, I risk 2% the next day, I risk 2% the next day. So I'm at a loss of minus 8%. The next day, again, I'm risking 2%. So, and I lose that trade also, right? It's very normal to have a 5 trade losing streak, right? So let's just say that happens to you. What happens is, again, it is another breach because you haven't breached the maximum daily loss this time. You have breached the maximum loss. So that is it for your risk limits. Now coming down into equity and balance calculations, right? So what happens is, some of the firms, they calculate maximum daily loss from the start of day equity. Others start from start of day balance, right? What this means is very, very, very simple. So for example, if you end day one with a $2,000 profit, which is a 2% on 100K, which is very normal, okay? But tomorrow's start used for maximum daily loss could be 102,000 or 100K, right? So what that means is, your maximum daily loss can be calculated either from 102,000 or from 100,000. So that is the difference of balance and equity. All right. So this is something that you have to notice. Equity is basically, for example, if I've made $2,000, so on 100K, it's $102,000. That is equity. So if your max daily loss is calculated from equity, you are looking at a max daily loss of somewhere around 98,000, right? 98,500, something like that. But if your maximum daily loss comes down to a calculation of your balance, which is an 100K account, you purchased a 100K account, so your maximum daily loss will remain static. It will remain at $96,000. So this is the difference and how you should calculate depending on the type of drawdown that your prop firm gives you. Oh, so here I'll explain to you exactly what a trailing drawdown means, right? So what it is a loss limit that ratchets up as you make new highs, shrinking your allowable giveback. For example, in your real-time trading, you follow an equity/balance highs during the day, may lock after a certain profit, end of day trailing. So like I told you on the previous example, right? A trailing drawdown usually uses your equity, right? So on the equity, you are 96,000, right? So you buy the account, your max daily drawdown will allow you to trade down till $96,000, right? But supposedly you close day one with a 3K profit. So now starting off with day two, you are looking at 98,999 because you have made profit and now your drawdown just keeps trailing with your account. So this is one of the biggest reasons people fail, as they have no idea what the difference is between a trailing drawdown and a normal static drawdown. Now you're looking at the minimum trading days, right? Most prop firms have minimum trading days and time limits. Minimum trading days is basically where you have to trade for a specific minimum amount of days, right? For example, if you have to pass phase 1 with 4 trading days. So supposedly, if you make profit with just 1 day, you can just place a very small lot, just like a 0.01 on the next 3 days and finish it, right? Apart from that, many prop firms used to have time limits, but this is something that you still have to take notice of. Many plans used to have time limits where you have to finish it in 30 to 60 day windows, or at least pass any one of the phases in 30 to 60 day windows. But usually you need 4 trading days, and even if you hit your target on day 1, you can just place a small trade on days 2 to 4 and just clear that. So that is done. Coming down into the instruments and the various platforms and the difference in leverage, right? So most prop firms give you MT5, which is very normal in this day and age. But some of the prop firms give you a wider variety, right? Such as you have your C trader, match trader, DX trader, and it comes down to just the way what software that you are used to. So you can select it, but you have to take note of each of these platforms, different platforms that you choose. I feel like their charts are just a little bit different, like their liquidity providers just change, is what I feel. But again, it comes down to preference. I am still stuck on with MT5. I have used C Trader and I do love C Trader a lot, but MT5 is still my main as of now, right? And when you talk about your leverage, most prop firms give you anywhere between 1:30 to 1:100, usually on the upper end of the range that I've just told you for your Forex. But for metals and indices, you're looking at lower leverages in usual, right? Because gold is just more volatile than your normal everyday FX. And there's a difference between swing accounts and normal accounts. It's there in a few prop firms, but swing accounts usually give you lower leverage because you're going to be holding it for a longer period of time, right? So that is it. This is a tip from my side. You can test the spreads, swaps, and execution. You can test all of these if you just go to the prop firm you want to buy, and they will have a demo account in their website itself. They'll have a demo account in their website itself, and you can just try it out. They will have a raw spread account and usually a standard account. So you can try both of them and see which one would you prefer, and do you even like the spreads, do you like the swaps, and do you like just executing a trade in those demo accounts. So you can try that and see if it is good for you. So that is something that I've recently learned, that you can test your spreads with these demo accounts. Just give me a second, let me. All right, so symbol trading hours, swaps, and maintenance. So each instrument has a trading hour. You already know that you're trading, right? So you already have a specific time limits that you have to maintain or to be able to take trades in. But there are these rollover / maintenance windows and swap charges, right? So you can't open and close during maintenance. Swaps can be heavy on metals and indices. Holding gold over the rollover, widen spreads plus swap, weaken gaps on indices. So this is something where people can easily take your money, right? Let me explain this to you. For example, right, if you are trading with X prop firm, for example, prop firm named X. So now you have to join their newsletter. You have to join their newsletter, or you have to join their Discord. You must follow their socials, so you know what's happening with the prop firm. So this is why you have to know, right? So you have your maintenance window. So sometimes, just like every other business, just like every other software, things need to be maintained or updated to, to work smoothly, and it's just a life thing, right? You just need a software update, and you just need to keep improving or making something better, smashing bugs in your software, etc., etc. So you have to know what these maintenance windows are. That is exactly why I told you have to follow very closely to your prop firm X, right? Once you know the maintenance window, you are not supposed to place a trade in those specific time windows. If you do, it's going to be very, very difficult for you to edit the trade, modify the trade, even maybe close the trade, right? Next thing, prop firms don't easily mention whether they are swap or swap free accounts, right? What swap or swap free means is, when you hold the trade over the day, or when you hold the trade over the weekend, there are these fees that you have to pay. Those are called swap, right? So for Muslim people and for people where you have to keep trading halal, I suggest you guys to have a swap free account. You can search it all over the net. If it isn't swap free, your trading isn't halal. Okay, you guys have to notice that. That's just another fact. I'm throwing it out there. So when you hold a trade over a day or over the weekend, you are going to be paying some charges, and including those charges, you're going to have very widened spread, because the liquidity is so less that spreads are just going to be very, very high. And even if you make a profit after the gap up or gap down on Monday, you are going to pay a hell lot for your maintenance charges, like your swap charges. So you have to know whether your account is a swap or a swap free account. That is something you have to look out for. Next is one of the most controversial or the most interesting part of the video, which is news trading rules, right? It's very, very, very easy to make money around news, and just like how easy it is to make money, it's even more easier to lose money during news. So news trading, usually you have a plus or minus 5 minutes rule, right? It's very, very simple. For example, you have CPI today at 6 p.m. for example, right? Just for example, you have CPI today at 6 p.m. You are not supposed to open, close, or even modify a trade during those plus or minus 5 minutes. If you do that, for example, the news is at 6, you open a trade at 5:56, 5:57, that is a breach. You make profit and you're very scared that the market is going to turn on you after the news is released, so you sell off at 6:01, 6:02. That's again a breach of your account. You have an existing position and you are editing your SL and TP, which is modifying your trade during those 5 minutes before and 5 minutes after time. It is another breach. It's just very, very simple. It is a breach. And you can just follow Forex Factory, right? Forexfactory.com, it gives you all the news, and you mainly have to follow just the red folder news. Or again, you can follow the Discord, the socials, where they'll be posting the various news that you as a trader have to look out when starting this journey. Yeah, I've already explained what the overnight and weekend holding does to you. So usually your evaluation phase allows it, but funded may require a swing weighting. So this is another trick in the book for prop firms, right? So they loosen their rules during the evaluation phase and they tighten it during your funded phase. So what I mean by that is they allow you to hold trades during the evaluation phase, or they allow you to take new trades during your evaluation phase. But when it comes to their funded phase, since you are already used to taking trades with the prop firm X, that you have already got used to holding the trades, or taking trades during the news time, you are going to do the same thing during funded. And when you do that, you're going to lose the account. It's going to be a breach because they have these hidden things, right? So this is something that you have to keep note of. Let's come to the position sizing, position limits, to be very precise and exact. A lot of prop firms out there have a maximum lot size, right? You can go into their FAQ page. Everything that I mentioned in this video, you can read through the FAQ page, but this is just something that I'm throwing it out to you. Before you go read the FAQ page, if you do have a look through this video, you will clearly understand all the things that you have to notice before buying or purchasing or even getting into prop firm space, right? So there are 2 to 3 different position limits. So one, you have your maximum lot size, like for example, you cannot exceed a 20 lot limit, or you have maximum risk size, right? So you can only risk an X percentage for one open position. So this is something that you have to notice and make a note of. Next thing, these are just some internal things that you have to control so that you can win in this game. When you're funded, please risk less than 0.5% or less, so you can survive, and survival is everything in the trading game. Do always have a soft buffer on your maximum daily loss limit or your maximum loss in general, because just calculate the commissions and the spreads that that the slippage, the spreads, the commissions that you're going to be paying for each lot, etc. So that's just come down to you. This is not a video about that, but I just wanted to let you guys know a small portion that you guys still have to maintain your own internal rules for you to succeed in this game, right? Now coming down into consistency rule. This is one of the things people really don't understand. Many people don't understand. This is one of the main reasons you don't get payouts. People just don't understand. So what a consistency rule is, basically it is an extra condition that you must meet to request payouts, right? It's again very firm specific, but I'm gonna keep it very industry standard so you guys know what's happening out there. So your best day must be less than X% of your total profit. Minimum profitable days per cycle, example +3 green days. Minimum payout amount or profit buffer. For example, if your total profit on a 100K account, you have made 10%, you have made a 10K profit, right? So your prop firm tells you that you must maintain a 40% consistency rule in order for you to be able to get a payout. But that means you have to make less than 4,000, like your biggest day must be less than $4,000 in profit. But if your best day is 6.5K, right? So one trade you made 6.5K, and the next trade you made 1.5K, that is 8, and then the next you made 2K, right? That just means that you are more than 40% of consistency. You haven't maintained the 40% consistency. One easy thing that you can do is just add more wins, or just keep trading, like just take more trades in general. and you will be able to pass the consistency rule. But this is something very important and specific you guys must keep in mind. So next thing, you have your payout mechanics. All right. So typically you're looking at between 80% profit share. So if you make a profit of $1,000, you will be keeping $800. You will get $800 and the prop firm keeps $200. But it's typically between 80 to 90. And your first payout should often be available around the week 2 of funding. And then it comes down to what you signed up for, right? Different prop firms have different rules, but in most cases, you're looking at weekly or bi-weekly depending on the plan. And there are many different methods that you can take your payout in. You can take your payout in Rise. You can take your payout directly to your bank. You can take a payout directly to your crypto wallet. Just comes down to that. But usually you have to pass a KYC, meaning just a proof of identity that you're a real person, etc. So this is something that you have to look out for. Now you come down into the next thing, right? EAs, trade copiers, and prohibited strategies. This is for your bigger traders, the people who have their own EAs, people who manage a lot of fund. And there are just a few prohibited strategies that you have to keep note of. EAs are basically expert advisors, and EAs are basically your algo bots that you see over the internet, people showing to you, oh, my bot can make you this much money, my bot can make you that much money, etc. Right? So those are what you call EAs, and most of them are allowed, but with a certain restriction. Like, for example, that the EA must be under your strategy. Like, you should have written the code by yourself, and you should have published it yourself, and you should be able to use it, right? And they shouldn't be HFT, like high frequency trading bots, where they'll be able to take a lot of lot sizes, a lot of lots in many small positions, etc. Trade copiers are usually allowed, okay, but mirroring so many accounts could be a mistake, and some prop firms allow you to copy your trades, but it's like the trade has to, like, for example, if there is a prop firm X and there's a prop firm Y, so prop firm X tells you you can trade copy, and prop firm Y also tells you can trade copy, but prop firm X tells you that when you copy a trade, that account must be your master account, meaning from prop firm X you can copy to prop firm Y, but from prop firm Y you cannot copy to prop firm X. If you do that, again, it's another breach, right? So that is something that you have to take note of. And common strategies like martingale, gridding, arbitrage, bracketing news, whatever, all this stuff you already know you're not supposed to do in a very normal trading scenario. And if you do that in a prop firm space, you're getting fucked up. You're gonna get screwed up, right? Now let's talk about the good things. Okay, let's talk about the good things, such as your scaling plans and your max allocation / merging. Scaling plans, you usually get to a scaling plan level. Like, for example, you buy 100K. Your prop firm allows you to scale your 100K all the way up to 200K, for example, right? So it usually comes down to, after a couple of months of clean performance, you can scale it up to 125K or 150K. And most of the cases, caps are usually 400K to 2 million across merged accounts. Like, for example, if you have 2 to 3 funded accounts with them, you can keep merging those accounts together and trade as one big account rather than, 2 to 3 different accounts. You can even do that. So merging accounts are usually allowed within the same prop firm, but then they usually have a max limit on the merging that you have to take care of. So that is that. This is something that, again, it's very nitpicking, but this is something that you just have to know, right? Which is server time versus your time. What it is your server or your broker's time is not the same as the time that you are in. Right now, I am in India. I trade in Indian Standard Time, but then I trade in gold and I trade during your New York session, your overlap session. So that's around 6 p.m. for me here, but then it's around 8:30 or 9:30, I think, in New York. So that is something that you have to keep notice of, because all the things that I've said before, like your maximum daily loss limit and your loss limit, etc., will be calculated from the specific server's time. So you have to keep note of that. These are just small things. It's just very easy to miss, right? You have your platform maintenance window. Like I told you, you should follow their socials very closely. You should follow their Discord, should follow them in anywhere they tell you to follow once you purchase an account with them, so you know what their maintenance windows are. Next, you have your slippage and spreads. Again, simulating prices still behave like live. They are simulating environment, like I told you in the start of the video, and they are just acting like they are a live account, right? So you can expect a lot of slippage, especially around news, and your spreads especially around Friday nights, like towards the closing and etc. You have your holidays and special hours where spreads widen, sessions are shorter, etc. Like I told you, always recheck their latest FAQ. So common breach scenarios, like I've explained a lot of things in this video, and the most common things that you see a breach happen is around these things, right? Floating loss breach. So a trader hits $5,010 floating on 100K because your max daily loss limit is 5%, but the price just goes a second down into 5,000 and then goes all the way back to 4,000 back again. It is still a breach, because your floating loss, even if you haven't closed the trade, your floating loss has exceeded the maximum daily loss limit that you have to maintain. Next, like I told you very early on in the video, you have your trailing end of day breach, right? So your floor moved up after a big green day, for example, that after you had a big profit, right? I have written the example somewhere. Yeah, so after you had a very big profit, you made $3,000. So like you're up $103,000. So now your daily loss limit comes up to 98,999. So you must keep checking your dashboard, and you should keep in check of your account, whether it's a trading drawdown account or a static drawdown account. Coming down into the news, right? News is a very sketchy thing. People know not to take a trade or open a trade, which is very common, but this is a very new thing that people still are not getting used to it, that even if you're holding a specific trade from before the news, you shouldn't modify the trade, meaning change your SL or change your TP during those plus or minus 5 minute, whatever the news minute window is, right? Next thing, you have a lot cap breach. Like I told you very early on, again, you have maximum risk that you can take per position, or you have maximum loss limits, maximum lot limits. When you look at it is, for example, if you take 25 lots where the maximum lot size you are supposed to take or can take is 20 lots, you are going to lose that account. It is again considered as a breach. And next thing is that you took a large loss just before daily reset, right? then another after another reset. So 2 losses count across 2 days. So that just means that if you're holding a trade during the server reset time, like I told you about, you should just know your server reset time and always check your dashboard if you have any confusion with the trades that are ongoing or the trades that you would like to take. So these are just some things that you just have to know, right? Just a compliance checklist to know whether your trade is compliant with the platform. First comes down your account size. So depending on your account size, you have maximum loss limit and maximum daily loss limit. So always set a maximum daily loss limit or a maximum loss limit. Just set it a little bit above that. So even if you make a loss just due to commissions and due to slippages and due to spreads, you don't lose the account in full. Next thing is you have to check whether your drawdown is a static or a trailing drawdown. Next thing is check your minimum trading days, right? How many days that you have to trade before you can pass a specific phase. Next thing is do check out Forex Factory window, forexfactory.com for all the red folder news, and do follow their socials, Discord, etc., where they'll be updating that. Stay vigilant and stay very safe around red folder news. Next thing you have is just holding rule. You have rules where you can, you're not supposed to hold overnight, weekend. You have to make sure that your account is a swap free, or you at least know that what you're getting into. So that is something you need to know. Next is just the platform that you are trading in and the symbol, whether it has an holiday or whether their server is under maintenance. Next thing you need to know is whether if you're using an EA, you need to know whether that prop firm is EA compatible, EA compliant. So that is something you need to know. Next thing is your consistency rule, the minimum profit days and the minimum payout amount, which will be easily differing across all your prop firms, and that is something you need to know. You learned all this now. How do you choose what's the best or the right plan for your style, right? So this is something that differs for every single trader out there. Every time I have a call with any of my community members, this is something that I keep telling them. Depending on your strategy, you have to buy a prop firm. Your swing traders who hold trades anywhere between 2 days to a month, right? You need a swap free account. You need some place where you can execute trades even during news, because sometimes in the higher time frame of things, news really pushes your trades towards an SL or towards an entry or even towards a TP. So that is something that you need to know. And it doesn't really mind about the type of leverage that you need, because on a swing trade, on a higher time frame of things, you won't really need the higher leverage. So next thing is the normal most people do, which is intraday trading, buy and sell and close your trades by today. I would say stick to a 2-step account. It's the most reliable, it's the most cost efficient, cost to getting whatever ratio, right? And stick to a static drawdown. A trading drawdown is just too much mind calculations, too much things that you have to keep note of. Buy an account with a static drawdown and do take care of the minimum trading days. Now, if you're a scalper, you will need an account which gives you good leverage, like higher leverage basically. And again, avoid trailing drawdown, right? And consistency rule. That is something that you have to notice, because if you are a scalper, each trade that you take is going to be different. So you cannot maintain the consistency in your trades, and so you should make sure you don't take a consistency rule. Shouldn't be there. Like I told you, in between, you gotta have your own personal risk plan. Comes down to you, but these are the things that you just have to have. I'll talk about how I go about things. I usually risk anywhere between 0.5 to 1% per trade, and I stop after 2 losses. If I have 1 win in a day, I'm allowed to take a second trade, or sometimes I just close the trade and I don't care about it. But if I have 1 loss, I'm allowed to take a second. But if I have 2 losses, I'm done for the day. So these are just some things that you just have to, you know, maintain. So we come down to the end of the video. It's been a long time. My throat is aching right now. So let's just quickly summarize the most essential things that you should look out for: maximum daily loss, max loss limit, trailing drawdown, minimum trading days, consistency rule, and whether it is a swap or a non-swap free account. So yeah, I hope I have explained every single thing that you need to know. And if there's anything else that I've missed out on, or any other doubts that you have, do not be afraid to comment. Or even if you don't want to comment on this video, you can message me, you can DM me personally. The link is in the description of this video. You can join my trading community and you can reach out to me, right? And yeah, that is it. I'll catch you in the next one.